Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Wednesday, and we had an inside type doji day. Felt like a lot of us wanted to find that cute short after a 70-handle move from last week's lows or from last Thursday's lows. And today, you really had to be a surgeon to dissect it. And with that being said, I don't know if it means we have a rest for a few days or it's a pause or they just try and trap some shorts and continue. But either way, today was more of a back and forth type day where you have the momentum names still acting strong and then some of the names that didn't act well, somewhat falling out of favor. So you want to see, where you want to, position yourself. As far as the SPX, you take a look at the chart. Here's your pivot, right? We talk about this pivot that drove a lot of people nutty, especially around the 200-day. This was your spot to say, okay, let me get back to neutral, right? I know in this area a lot of people got hurt because it was very easy to get hurt, especially considering you had this major reversal on Tuesday. I know that's when I got long a lot of names. Then this day stopped me out. And then a lot of people got short below the 200-day. For me, I just was flat and a little upset that that took place. But within this bar, I was like, let me get some risk on. So anyway, that being said, you cleared your pivot, showing you some strength, showing you some potency, showing you that something changed. Maybe we're back in vogue. So hopefully if you didn't cover your short here, you covered it there. And then you had a little bit more follow through on Tuesday as we cleared the prior high. And then today, you had a little bit of a red dog reversal, doji. And wasn't blaring and doesn't seem like, there was so much selling pressure. You still had some stocks hold in there. But overall, you traded above 2111, went as low as 2102, 10 handles, woohoo, big deal, and then closed in the middle. So we'll have to see what happens tomorrow, with the open. So question is, do we flag here and then go higher to break this little descending channel? Or do we break below this, test, this 2095 area and let the moving averages catch up and, relax a bit? I think relaxing a bit would be great, but market doesn't do what, everyone wants. And as far as here, it's already back on the left side of this trend line that you broke below. So, more neutral to positive than neutral to negative, at least, from a macro stance. And, hopefully you switch some gears here. You had a nice 3-day move. So within that move, there were names that were explosive and names that were, tagged along. Some of the explosive names took a day off today. Amazon, in the scheme of this rally, took a day off. For me, it's hard to buy a small one-day inside day, so I didn't. Traded a little bit today, but I think I'm going to give it a little bit more space, a little more action in there, and perhaps it continues. I was hoping to see, a little bit more downside over the course of the next session or so, perhaps to retest this, but we're not sure. Ultimately, though, really nice move. You got to grab those and go with those when they happen. Google, same type of thing. Inside day today, gave a brief rest. If you buy the first day of a brief rest, congratulations. We'll see what happens tomorrow. Here's when it broke out. As of right now, it's an inside day. You have a little bit of a flag pattern. Hard to buy the first day of rest. Sometimes you get a little bit more, sometimes you don't. It depends on the type of tape. But ultimately, broke above this spot and held it. So Google has been acting, very strong. This is your short-term look. And then if you go a little bit more macro, you'll see that, it's got a big channel that it's kind of going to trade against. And we'll see what happens next. This, you would say almost broke above it right here. So, we'll see what happens on earnings. Earnings, I think, are on Thursday, which is a little ways away, and that's that high of this overall pattern here, which has been in a consolidation phase for a long time. You're going back to 2014 to get that peak. So we'll see what happens there. As far as Apple is a decent trade for some of us today. Showed a little relative strength, not a heck of a lot. We've been talking about this channel in here. For a while, it's been kind of lethargic, and guys have made more money trying to short strength versus buy strength. And then you had this, let's put this over here so we could draw our little lines. Then you had this, break below this little trend line, gave you your overthrow, and lately that's all you get in this market is an overthrow down. You don't get follow through. Came back up today, cleared this little pivot, and now it's going to be brushing up against this moving average downtrend. If it breaks this, I don't think it goes right back to highs, but earnings the next Tuesday, and there's a pretty big void over here to see what it wants to do. Overall, some decent action ever since closing and holding the 200-day with that overthrow. We'll see what's next here. It did show relative strength. I didn't take it home. It was a decent trade today, intraday. As far as Facebook, not falling apart, but showing a little digestion. Here is when it was compelling to buy. This is when it traded above the prior high, corrected a bit, traded back into new highs, and now it's trying to consolidate again. A little wishy-washy today. Seems as if you're just a buyer of every dip in Facebook, maybe you bought it today. But I think for me, I'd rather see some kind of RDR into this spot, let the 8-day catch up, and be a little bit more careful. LinkedIn gapped up, pushed, and kind of came off that spot. Still somewhat broken. Twitter, unfortunately, that rumor kind of ruined the stock. Looked good here. This is when I started to, rebuy it for a swing trade. Then you had this push into resistance on the fake takeover talk. That probably got some fast money in there that didn't want to be there, and some shorts said I'm coming back. So today I got my stop at this break. I said if it could hold 36.20, I'll stay with it. If it doesn't, I'm out, and got out basically, and now it closed a little bit back into the base. So this is just a choppy mess. So take your trades when they come. Not a leader by any means, below all the moving averages. Still has a lot to prove ever since it broke this spot right there. As far as some of the bios, you had some excitement. You had the takeover. I know I came in long GILD and I came in long GWPH. Unfortunately, I didn't have CELG, which was the better one. CELG did push and then come off the highs. For those of you that short the acquirer, it took some time to finally work out for you, but it did come pretty well off the highs, and now you'll see, I guess, if it holds this prior high here. As far as the IBBs, we talked about not buying the excitement. It wasn't an easy short. It took some time, but you did get a trade well off the highs. You just couldn't do it so quick. So now you'll see what happens here tomorrow. This is actually won't get there. This would be the prior high to hold. Obviously, you have today's low as a pivot for tomorrow. Ultimately, though, very, very strong, just extended right there. I came in with GILD and actually sold this one pretty well, sold some strength. I don't know why it, closed on lows, but this was your buy and sold some strength. And just so you see on a 5-minute basis how to navigate these things for GILD. I know, the first quick move down, it looked good, and then I actually added to it. I added to it when it, when it broke above that 30-minute high. And you were able to sell some strength. But once you get this green matched with the red, you have to be very careful. And then on this little wedge type pattern, I just said, you know what, I'm done with this for now, and thank goodness. Now we'll see what's next there. Banks still hanging around. JP Morgan, a little bit of what did this do today? A little bit of not even a doji, held in there. This to me probably makes new highs at some particular point. Bank of America came in long, sold half, held a portion. Still looks good. Now I would say let it build a new flag above this gap, and then if it could stay above this gap for a certain amount of time, I do think you can get another trade in here. Goldman Sachs is tomorrow. We'll see what it does, but if JP Morgan had a good report and Bank of America, you would think that this would as well. Old highs are here, so we'll see how that responds tomorrow. Oil that blew off Iran yesterday said today it's no one's really interested, and we'll see what happens if it raises some volatility tomorrow. This is the prior pivot. USO, it's like 1695, getting pretty close. XLE we tried yesterday, and I put my stop in at that pivot, which is where I figured it would have to hold, which was about 74.19. So got out there, so I saved myself some money. Still broken, still below the moving averages, so you have to be careful. They don't always build. And I guess if this were to break below, this key support, the market will notice. Right now, the market doesn't seem to notice that this is taking place. So we'll see if it happens to hold it or break it. It's come down a long way, so at this point, it's not an obsession of the market, but just goes to show you that when you have, a 21-day moving average break, you get out. When you have a retest that fails, you get out. Or when it breaks the 200-day and stays below it for 5 sessions, that's your out. And now you could try it, but you don't stay married to it because it's still somewhat broken. As far as gold, what's that doing? Gold's just horrendous, trending lower for so long. You know, I loved this thing years ago. You know, people like Redler, why don't you trade this anymore? I'm like, you know what? I loved it right here. It was calculated. It was trending. You had your inverse head and shoulders pattern. This is when I told Mark Haynes that I think it goes to 1,500 an ounce right there when it broke the wedge, and then you had an inverse head and shoulders pattern that said it can go to 1,500, and it did. And then all of a sudden, you know, trends change. This was one trend that changed, and this was macro support that broke. And since then, it's been horrendous. So I don't know how much follow-through you're going to get to the downside here, but you know, who knows? It could test this spot, and that's probably knocking some teeth out of some of the bugs below all the moving averages. But again, this is when, you know, you had your wedge. I remember this wedge when I was like, guys, you know, make some moves here, and then if you didn't do it there, here's your macro support. Macro support broke. Okay, here's when it looked great long. Right now, there's just no identity in gold. You know, I think people would rather have a, you know, a large pie and a case of Sam Adams versus a bar of gold, unless you want to use it as a weapon if the world would end. You know, it's not really, you know, something that is being proven as a safe haven as far as currencies or whatever. But whatever, I'm not here to change your thesis on gold near historic or yearly lows, but it's been that way for a while, so that's why we've been avoiding it. Netflix came out with earnings after hours. It split. You know, the only thing you knew after hours was that it was it had a 52-week high right here. So once it cleared this pivot of 102.30, guys like Sperling bought it. If you were on the VTF, you saw him get long. I think he even bought it a little bit before. And then I think before I left, it was as high as almost 110. So what an incredible stock. You know, if you're in it still long and you didn't sell it when Carl Icahn sold it, you know what, good job to you, and you stayed with it. Still above the 8-day, was above the 21-day, and you're doing well. Take your trades, know your time frame. Intel also was priced for a horrendous report, and it seemed as if it was pretty solid. Let's see if we can get some data here. So with that being said, the report wasn't as horrendous as people thought, and it's rallying a little bit. So you know, resistance 1, or actually really resistance that we'll see how it handles it tomorrow, which we'll talk about, comes in at like 32.29. It already cleared this 31 with ease, so we'll see what happens there. It's come all the way down, you know. So it was priced for a horrendous report. So right now you're getting a little relief rally. So see what happens into 32.30. So not sure how we're going to open tomorrow. You know, you have Intel up after hours, Netflix up. It's still early. Little doji today. I think a lot of guys wanted a few days of digestion to pretty much get things back built up, ready for maybe new highs in the overall market. The move higher proved to be a lot more than feeble with a lot of power, and it happened fast. You had to switch gears fast. You had to be on top of your levels, and you know, a lot of guys got crushed short, and some are probably still short from last week. First time he closed below the 200-day in the S&P, guys like, oh, here's my short. Faber's going to be right. We're going to crash. Cass, who's all in short now for the 17th time in 3 years, I'm going with him. And meanwhile, you had that Friday gap and go where you had to either take your losses or you're rolling it up. It's up to you. If you got stopped out of some longs like I did last week and you know got spun around, it happens. And I think I would behave the exact same way I did, except for maybe stay in Asia or China one more day, as if I started a tiny bit too early and I didn't catch that bounce the way I wanted to. But on the other days, you know, adjusted the way we had to adjust. But thank goodness on Friday on the gap and go, we said, okay, last week's behind us, get in some longs, get in some key names, some levels are being reclaimed and broken to the upside. Forget what the market just did, look what's in front of us, and you caught a nice 3-4 day move to get yourself back on track. So at this point, market doesn't owe you anything. We'll figure out what's next. You know, Greece still has to do their push their reforms through Parliament. You saw some riots in the street today, which kind of helped our cute short in the spiders today. I did cover that. You know, made a little bit of money that way. Felt like I stole something. It was really hard for the market to go down. You still have China that's down 4% out of the 8% bounce. So we'll see what happens there tomorrow. So there's still going to be a lot of opportunities. So if you happen to be, you know, kind of light tonight. Tonight is the lightest I've been since Friday as far as from the long side, but I decided not to go home short. So I'll be flexible, figure it out. If we don't pull in and, you know, some bull flags develop on a lot of these strong names that are near highs, I'll, you know, try and take some more active cash flow trades. But be flexible and not just figure out, not trying to short the market because of what happened last week, and not try and just buy anything because you feel like you missed something. Stay calculated, stay focused. There's a lot of action out there. Earnings season just started. We have a lot to go through, and hopefully you're navigating these markets with a clear head, because a clear head is what's really important. Have a good night. I hope you enjoyed Amelia. She filled in real well for Brittany. She'll be back tomorrow. Bye-bye.